I don't enjoy saying this, but the newbie investors do not understand the importance of cash flowing properties or actually the importance of cash flowing business.
Wow.
Cash flow from your portfolio will give you the freedom to live the life you want to live on your terms, not the tax benefits. Let's be crystal clear about that,
Right,
right?
right.
What I can tell you is finding the highest profitable short-term rental property and then buying it the right way and leveraging advanced tax strategies are not straightforward issues. And there are often huge, huge amounts of money at stake.
What would you say your process for identifying markets that offer strong returns, but also a market where short-term rentals are there to stay?
Good question. Our investment strategy is very high level and data driven. Like anyone else, we use AirDNA and other online platforms to estimate the gross revenue potential of short-term rentals. However, we also leverage our nationwide short-term rental operator network in every market we are looking to invest in to get a better understanding of the property level revenue data for short-term rentals. We talk to at least three local short-term rental operators to get the actual gross revenue numbers. That is a huge differentiator for us. It also helps us pinpoint the best submarkets and properties within a market. What I can tell you is if you are only relying on AirDNA or other online tools to figure out the Airbnb earning potential, there's a good chance you will purchase a property that will not cash flow. In addition to that, we study short-term rental markets nationwide. We know where properties perform best in a particular market relative to the prices of homes. That work also sets us up for success. We identify the top investable markets by investment size, 250K and 300K, and we used property level performance data for short-term rentals and indexed around supply growth, pricing growth, rental demand, and revenue growth. But besides, like data, we follow three basic principles to meet the cash flow and ROI goals of our investors. First, we focus on purchasing large single-family homes that are undervalued properties in a great location with views. None of the amenities that you put into a property can make up for the views and the location. This way, every property that we have purchased cash flows. Second, we avoid buying a 2 or 3 bedroom short-term rental property. It's not worth tying up your limited capital just to make $1,000 a month at best on a 3-bedroom home, just like anyone else. Third, we go all out on amenities, interior design, and differentiation. That's how we stand out and increase the net income and dominate the competition. What I can tell you is if you're not differentiating your property from the competition, it's going to generate average revenues. It's going to be a race to the bottom.
A follow-up to that, when you're talking about markets that have like short-term rentals are there to stay, is it safe to say that the markets that have been around the longest are more likely to stay around, like a Smokies, a Carolina, North Carolina, or like how do you determine whether or not an area is going to be a short-term rental for a very long time?
I mean, the thing is, every single market is saturated,
Mm.
right? And it really boils down to the location and how you can, like kind of differentiate the property. Um, to me, like it's quite possible to make, like this amount of cash flow in small keys, but like if the property has got the views, that long range, like an amount of views, and if it has got a outdoor, like kind of pool, not indoor pool. Hear me out, right?
Mm.
Um, and like leverage a professional, like interior designer to furnish the property and decorate it. Like it's more than likely that property is gonna dominate the, like the competition and will cash flow quite well. Um, and you can, like kind of, you can replicate, like the same, model in Asheville, North Carolina. Obviously, you have to pay attention to, like kind of that market because you cannot do, like short-term rentals within the city limits in Asheville, right? But the point that I'm trying to make, every single market is different, right? But it really boils down to, like those three things, like I previously mentioned, like the location, the proximity, like to the attractions, and the amenities, like that you can put it, like into the property, and how well it's managed. Because, like getting a property, furnishing it, putting on the market, it's only half of the battle. If
Mm.
it's not, like managed professionally, and you do not, like kind of get them reviews, those 5-star reviews on VRB or Airbnb, then you're not going to be able to be on the first or the second page of them, like those search engines. Like in other words, you're not going to be able to command, like kind of higher daily rates, which is going to, like hurt your bottom line. Did that kind of answer your question?
Yeah, yeah. Another question that I had, and we were just talking about this earlier about like, I'm a high income earner. I'm staring at a six-figure, maybe even seven-figure tax bill if I don't do anything. Like how does an investor determine how much they can bite off or chew, so to speak, on their with their first investment, their first short-term rental? Like if somebody comes to you and maybe they do have $500,000 to spend, right? Like how do you how do you advise somebody buy that first property?
First off, um, we do extensive due diligence before investing in any market, but um, we have a step-by-step process in place. But the first thing we do is to get our clients pre-approved for a
Mm,
short-term loan before start looking for a property.
mm,
This way, we ensure that the investor's amount of eligibility for the loan is the direction of the property price range we are looking at. After that, we dive deeper into investor specific situation because every single investor that we work with is different. Some of
mm.
them, like kind of make over 500 figures. Some of them make well over, like kind of 7 figures, right? And we also, like dive deeper into their real estate portfolio, long-term investment goals, and more importantly, personal preferences. Some of our clients are the first-time real estate investors, just like you were mentioning, and they have no experience, like with real estate investing or any of the, like the tax benefits associated with real estate. So based on, like client-specific situation, we select the short-term rental markets and find the cash flowing short-term rental properties for them. But it's important to mention that cash flow is a very important metric for our investors, as they all have high paying jobs and interested in certain net income and ROI figures.
Mm.
So let me go a little further, and we do not buy a short-term rental property for just for tax benefits. We factor in historical appreciation, but we do not bank on it. We always look for and buy a profitable short-term rental property. A deal may be tax advantaged, but the tax advantage should not overpower the actual economics of the deal.
Yeah. And I mean, unfortunately, I've seen way too many people make investing decisions just solely based on the tax benefits.
Yeah.
Um, I mean, I would rather you spend money on a rental property rather than a new car that's going to lose value in 5 years. But countless times have we seen investors, they buy a property because it's going to save them 50, $60,000, but then the property turns around and loses $3,000 a month because they rush to make a decision, bought wrong, managed wrong. And next thing you know, a year and a half later, they're right back in the same spot net worth wise because they just lost 50 grand from
Yeah.
owning the property.
Uh, Remember, for the most part, like every single investor we work with, this is going to be their first short-term rental, like an investment. So it has to be a success story for them, like in order to continue to buy, short-term rentals and accumulate wealth over the years, right? By leveraging the tax code. So we are, like an extra cautious with, like every single investment decision that, kind of we make. But it really boils down to, like rolling up your sleeves and doing, like the due diligence, doing the hard work, talking to those, talking to those folks, like who are in those markets already, like running short-term rental properties.
So that first property, right? I'm listening to this. I'm a high income earner. Pretty much all my net worth is tied up either in my primary home or a retirement account. If I have a net worth, right? Because have a lot of loans. So that first property, how much of that is really just to get on base, so to speak, and to start shifting some of your net worth from earned and active income, super high tax bracket, over to a lower tax bracket through real estate? Like, how much is that first investment really just about getting on base as opposed to hitting a home run? Because nobody's retiring off of one property, right?
Absolutely. It's a very good question. Actually, we recently worked with an engineer at AWS, a distinguished engineer.
Mm,
He earns over 400K annually from his job. Like obviously he does have some, like kind of stock options, like on top of that. His high income also places him in a high tax bracket, right?
hmm
He owns long-term rentals, but never bought a short-term rental before. The client was interested in purchasing a short-term rental property, utilize it to generate income while concurrently writing off depreciation or non-cash expenses to reduce taxable income. So the point that I'm trying to make is a good fit, very good fit for the STR loophole. I mean, we help our client purchase an existing short-term rental property, and the interesting thing was the property was on the market for only 6 days, and we
mm,
purchased it with the furniture about 6 weeks ago. And our client already closed on the property because it takes about 4 weeks to close on a property, right? It's listed on Airbnb. He's currently getting bookings, and the property will be rented out multiple times before December 31st. Therefore, our client will be able to lower his taxable income by thousands of dollars, like this year. But it's important to mention that we got the actual short-term rental earnings and as well as profit and loss statements from the previous owner. We've done some extra work for this client because he's not very numbers driven, just like myself. So just to give you an idea, 35% cash on cash, 62K net annual income without adding any tax incentives to the deal.
yeah.
So our client will generate over $5,000 in monthly cash flow from a single property by, like kind of purchasing a large single family home in a great location. And that number will likely go up once we add all the money making amenities to the property. Work in
Mm,
progress, right? I mean, with higher interest rates, long-term rentals, multifamily, or real estate syndications offer minimal, if any, cash flow margins. As you know, we do not need to, like you do not need to scale up to 100 units to achieve $10,000 a month in cash flow with short-term rentals.
yeah.
But the moral of the story, the reason, like I'm going, like over the numbers, our client is going to diversify money out of stocks and long-term rentals into a tax advantage cash flowing short-term rental. On a macro level, he's going to take advantage of the short-term rental loophole and lower his taxable income substantially. On a macro level, he's going to build a passive income portfolio over the next 3 years by using the tax savings from the first deal to buy another short-term rental property. And you can see where this goes. By far, the best way to legally and ethically reduce your taxes and get rich slow.
hmm Yeah, and I mean, you said too, it's like, okay, well, he's making 400 grand a year, so he's probably, taking home 28, probably 25, 28 grand a month after taxes. Well, he's adding 5,000 a month in tax-free income because of the short-term rental. I mean, you only need to do one a year for three or 4 years to pretty much replace your after-tax income at your job. Um, and so actually in that case, you would only need four base hits in order to score, essentially.
Yep. And
Yeah.
that's the exact, you are spot on. And that's the exact strategy I implemented for myself. And when I saw the, like the power of, short-term rental tax strategy and, like power of buying, like a cash flowing short-term rental property, it was a no-brainer to, like leverage this loophole and accumulate wealth, like over the years.
Yeah, and that I mean for the tech employees, especially AWS, NVIDIA, I mean a lot of their wealth is so centric within inside of that company stock. I did a consulting call with somebody where it's like 65 to 70% of their net worth was tied up in their company stock, which was restricted. They couldn't do anything with it. They
Yep.
weren't, and so it's like, man, you have a $3, $4 million net worth, but 75% of it's in one single stock for the company you work for. That's a huge risk. And most people aren't as risk adverse as I am because I'm an accountant by nature, but I
Yeah.
cannot sleep at night if I had 70% of my net worth in one stock.
Yeah.
One stock.
I couldn't agree more. Prior to investing in short-term rentals, actually, I worked in technology sales for
Yeah.
almost 18 years. So I know exactly where you're coming from, right? And I must tell you this, it was a lucrative career, right? Made quite a bit money. However, I can say I like the part of getting laid off without any notice.
Mm.
Uh, and I have never been good at playing politics in the corporate world, right? And the idea of trading time for money, doing something I didn't enjoy, wasn't satisfying. And actually, I got laid off back in 2020 and decided to be my own boss. And after doing a significant amount of due diligence and talking with successful real estate investors, it became clear that short-term rentals deliver a faster return on investment and a higher cash-on-cash return than other types of real estate investments. Plus, the underlying assets often appreciates. It's almost impossible to get a similar number with a long-term rental, with the usual cash-on-cash rate being around 8%. Once I realized that I could generate enough income to cover my living expenses, and the massive opportunity to reduce my tax burden with short-term rentals, I literally decided to put all my focus and my money into investing in cash flowing short-term rental properties and properties that put money into our pocket, like each month. To give you an idea, my first short-term rental property in South Florida generated 210K gross revenue, and the net income was 63K in the first year of operation. So um, that was a success story.
63K in net income. And this was back in 2020. So what do you remember what you saved in taxes the first year?
Um, Not exactly, but definitely thousands of dollars.
Yeah.
I don't want to, like, gonna mislead, anyone because I'm not a CPA like you, right? Like, but um, I mean, tax benefits are great, right? But I'll tell every single investor it's a cherry on, like kind of top, right?
Yeah, yeah.
You should be obsessed about, like the cash flow. I mean, there are like so many folks, like out there, very intelligent people. They're really good at what they do, but they just don't understand, like the importance of cash flow, like in business.
Hmm.
Um, because when you think about, like short-term rental loophole, like leveraging the strategy, yet first year you're gonna get, like a predict, like kind of big tax refund, right? How about second year or the third year? Like you're not gonna be able to, like kind of get that, like kind of tax refund. So it really boils down to, like the fundamentals.
Hmm.
Like you bought, like has to cash flow on a monthly basis in order for you to expand your portfolio and build that, like kind of wealth over the years.
One of the questions that I have is a first time investor, a lot of times what I hear is that they're hesitant because of regulations and seasonality. What do you guys do to address those concerns and really make them feel confident about their purchase?
Yeah. So um, we do extensive due diligence before investing in any market, like I said before, and we do have Department of Planning and code compliance contacts for
Mm.
every city that we invest in, from like Asheville, like in a North Carolina market to Maine, right? Once we find a property, the first thing we do is to verify the address within the city Department of Planning to make sure it can be rented less than 7 nights on Airbnb. We regularly hear stories of investors who buy properties and later are hit with the news that the city shut down short-term rentals, in an instant, your short-term rental business is shut down, and you're going to and you got a big liability on your hands. So you must do your research and ensure you comply with all local laws before purchasing a short-term rental property. And we tend to stay away from homes with HOAs and actually never purchase a condo or a single family home with an HOA. And the reason for that, HOA rules could change overnight, and they can ban, like kind of short-term rentals if they want to, pretty much, like anytime, right? So, but the second part of your question, seasonality, because that's a big one. We master the Airbnb seasonality in all the markets, like we invest in for bigger profits year round, and
Hmm.
we share that info and local market, like kind of local market demand patterns with our clients. Once they sign up for our program, we teach them how to implement dynamic pricing based on seasonality, how to offer targeted promotions during, like off-peak season, and how to highlight seasonal attractions in, like in your listing. Essentially, we equip them with all the skills and knowledge that they need to be successful and maximize profit from their, like short-term rental investments.
You mentioned something in there about the peak season. I mean, how important is it as a owner or a potential STR owner that I get everything purchased, bought, set up, ready to go way before peak season because people aren't waiting last minute to book their summer vacations. They're booking summer vacations over holiday breaks,
Absolutely.
right?
No, no, no. That's a great point, actually. And there's, like we always buy large, like 4 bedroom plus single family homes. And there's
Yeah.
always, like certain lead time associated with, like those bookings, right? But when you think about the groups, like 10 people, 8 people, they have to organize everything. They have to purchase their flights. They have to, like kind of sign up for certain attractions in that, like kind of city that they want to spend their time. So you're essentially looking at about, like kind of 60 days, maybe 55 days in like lead time, right? And that's something, like you have to watch closely in order to, like kind of maximize profits. And we do teach that to our, like kind of investors. But let's talk about like South Florida, right? When you think about like South Florida market, it is saturated, obviously, like any other market, but especially, like winter months, January, February, March, like that's the high season. As opposed to like the low season in other markets, right? In North Carolina, for instance, because it gets really it gets like really cold, right? Like so people really want to like kind of get away to the beach, like they want to spend more time, like beautiful weather. So in order, like kind of for you to maximize profits, first of all, you need to have a, like you need to leverage a dynamic, like kind of pricing software. But that is not enough. In addition to that, you have to, like kind of manually log on to your listing, like kind of check out your pricing, like at least once or twice a week to
Hmm.
update, like your pricing, like kind of manually because you are getting bookings and um, you need to, like kind of effectively maximize, like kind of revenues in order to, like increase your cash flow, right? So what I would do, I personally, like gonna spend quite a bit of time, like kind of looking at like the price labs, right? Like, like updating, like the our pricing, like kind of manually to make sure we are, like kind of getting the top dollar, like for our properties. Because when I say, like my first property, like gross, like over 200K, we done a, like a good job in terms of leveraging, like the dynamic pricing as well as um, charging, like commanding, like kind of higher rates during, like kind of peak season. Did that kind of answer your
Yeah.
question?
No, it was just so funny because like I remember having this conversation about a year ago at a mastermind meeting over the winter and um somebody was talking about the season for their market was midsummer, like a lake market,
Sure.
June, July, August, September
Yep.
being like peak season. And they were saying, like this time right now, last year, they're like, oh, well, as long as I buy the property by March or April, I'll be good for the summer. I'm like,
Absolutely.
no, you have to have it listed now because people are booking their vacations over Thanksgiving and Christmas break for next year.
Right. Exactly. And same thing, like I keep, kind of talking about South Florida, but when you think about the hurricane season, September and October, like you're gonna have to lower your rates, like as much as possible, and like kind of get, kind of longer than usual bookings.
Mm.
Like we tend to, like kind of rent the property to an executive, who is relocating, right, to South Florida. He's in the process of, like kind of purchasing a home in, like let's say in Miami, and like our property, like in Fort Lauderdale, it's fully furnished, it's gorgeous, right? It's a waterfront, like kind of property. So, like we lowered the rates and rented it for a month or maybe, like kind of 60 days because we don't want to stress out, like getting, like weekend bookings and lowering the pricing, like as much as we can. That never been our, like kind of strategy, right? So we stick to, like kind of the market demands and, like our local knowledge in order to, like kind of maximize profits.
That's a good point. I never thought about that. Like like booking, if you have a property in the hurricane zone, most people are going to be booking it last minute, I would imagine,
True.
when they figure out that there's not a hurricane. So that's an opportunity to like, instead of discounting your price 50% right now and just throwing it up there, maybe if you know it's going to get booked regardless, as long as there's not a hurricane, maybe you wait till a couple weeks out and then you can raise the rate a little bit. I never thought of that, but
Yeah.
thank you.
Yeah. No, no, no. Again, like I'm obsessed about, like kind of revenue management because that's how, like kind of we were able to accomplish significant amount of, like kind of profits. Um, so that's something, like kind of that needs to be taught well, right? And if you don't have a, like kind of clear revenue management strategy in place, simply put, you're not gonna gross that amount of revenue, and like you're gonna you're gonna make some like kind of cash flow, but nothing like kind of that crazy, right? So
What type of clients do you have experience working with helping them buy short-term rentals?
we primarily work with high income earners,
Mhm.
and I would like to make it clear that our service is not for everyone. It's for the high income earner or the high net worth individual who wants to buy his first short term rental property or scale a short term rental portfolio while maximizing tax benefits. And it will require a high amount of starting capital. So, like if you're a high income earner or high net worth individual and looking to deploy capital in real estate, like you should, like kind of definitely reach out to us and we can set up a, like kind of 30-minute call to dive deeper, like into your situation. But we tend to work with corporate executives. We tend to work with quite a bit, actually, physicians. We tend to work with high net worth individuals. So that would be our, like kind of those are our market segments.
And just to, I guess, touch on that, like what sort of pain points to they kind of go through? Because we were talking about this earlier, the tech employees, right? A lot of their income is phantom income, so to speak, where like they have taxable income, but it's actually in the stock. So in order to pay taxes on it, they have to sell the stock, or like a medical professional has student loans could be an issue sometimes too. So
It's
like,
a huge one. It's a huge one.
what are
You're
those problems that they have that other people don't?
Yeah, I mean, you mentioned, like the important ones, but let me, kind of point out something else. And I, like I previously, like I mentioned this, and I don't enjoy saying this, but the newbie investors do not understand the importance of cash flowing properties or actually the importance of cash flowing business.
Wow.
Flow from your portfolio will give you the freedom to live the life you want to live on your terms, not the tax benefits. Let's be crystal clear about that,
Right,
right?
right. Yeah.
And based on my experience, most of the investors also do not have the expertise to analyze markets and deals properly. They are not looking in enough markets or the right markets. They also do not know how to underwrite a property properly. What happens is that they ended up overpaying for a property, and after they buy it, they realize that it doesn't cash flow. I mean, I literally get calls from investors, I would say on a weekly basis, and brilliant, like kind of surgeons, right? Like like kind of corporate executives, right? Oh, we thought, like short-term rentals, like were great. We, I kind of purchased, like the first property, but it's not cash flowing. Actually, I'm losing money. So it's not unusual for us to, like kind of hear these, stories from our, like kind of clients. But what I can tell you is finding the highest profitable short-term rental property and then buying it the right way and leveraging advanced tax strategies are not straightforward issues. And there are often huge, huge amounts of money at stake. It really requires the help of a team, specifically a real estate CPA or a tax strategist and a short-term rental investment expert. And essentially, we solve these fundamental, like kind of problems for our investors, not only helping you save 5, 6 figures in taxes, but also mitigating the risk associated with buying a short-term rental. By leveraging our expertise to buy a short-term rental property and working with a tax strategist, you are able to own a cash flowing short-term rental property, which appreciates in value and lower your taxable income by hundreds of thousands if you are making over 7 figures, right?
Yeah.
So we also teach you how to expand your earning potential by strategically accumulating additional properties and build wealth.